Hey, good afternoon, everybody. Going to go over our trades for today, Tuesday, January 31st. This was a trade which was actually closed out yesterday, early afternoon. Was a scalp / correlation trade, as we like to call it. The trade was really in Kiwi dollar, and we correlated it with Aussie dollar. It is the end of the month, so we cut our size in half. So with that, sorry about that. With that said, we had 30% of our normal size in the Kiwi dollar and 15% of our normal size in the Aussie dollar. We'll go over that in a second. First, economic news for today. Tomorrow, we get the interest rate decision from the Fed. Last night, we got the interest rate decision from the Bank of Japan. They kept rates unchanged. Yield target on hold. They did upgrade their growth forecast, and they had no mention of the 33% of the ETFs that they do not own. They already own approximately 67% of every ETF on the Japanese market. Thought maybe they might mention stuff, but they didn't. This morning, consumer confidence disappointed, missed estimates. You know, last month was good. Maybe people were feeling good because of Trump victory. I don't know. Maybe not. I have no idea. But last month was very solid. This month was not good at all. Chicago PMI misses, fell to an 11-month low. That's not very good there. And Case-Shiller index, which is the go-to index for housing market, came in with a slight beat on estimates with 5.3% year-over-year growth. So pretty decent news there from Case-Shiller, although in housing market we've been getting very conflicting economic reports as of late. Let's get to the trade. Like I said, the Kiwi dollar was the trade that we were in, and this is a prime example on why we love to correlate trades. You know, the signal was to go long Kiwi dollar. We went long at 0.72691. If it was just a pure scalp, we would have been stopped out easily because it went against us. You know, on a pure scalp, we're not going to risk any more than 30 pips. Matter of fact, it would have went against us about 34, 35 pips. So it would have been stopped out without a doubt. But since we were correlated it to an extent, you know, not 100% correlated, obviously, but since we were correlated with the Aussie dollar, we had a chance to give this a lot more time to work its way out. And it did so beautifully. You know, obviously, if we would have held, look what the rally gave us. Let's see how Aussie dollar did. Yeah, it spiked as well. So we were long the Kiwi dollar, like I said, from 0.72691, 30% of normal size. Came up here into this consolidation range. We took it out. We took the profits off the table. 0.72827 for 13.6 pips. 30% of normal size works out to 4.0 pips. And at the same time, we're correlated it with the Aussie dollar, which we were short from 0.75529. And you see what it did here. And as Kiwi dollar had this strong bounce, because Kiwi dollar has been slightly stronger than Aussie dollar, the Aussie dollar bounced, but not as strong. So therefore, we ended up covering at 0.75589 for a loss of 6.0 pips. We had 15% of our normal size, basically half of what we had of the Kiwi dollar. And it worked out to a loss of 0.9 pips. So overall, 3.1 pips on really, you know, half our normal size. So if it was during a regular month, during the regular time of the month, it would have been a little over 6 pips. But we'll take it and we'll move on. And we did add another correlation scalp trade, which we're in, which we'll be holding through the interest rate decision, most likely, unless we liquidate it tonight. Or tomorrow morning. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming we get some out. Well, got the Fed interest rate decision, so won't be back tomorrow. We'll be back Thursday. We'll be back Thursday if we get some liquidated trade. That's it. Have a great rest of your evening.